The envelope arrives on a Tuesday, 11 days after the funeral. It has your mother's super fund printed in the corner and your name spelled correctly, which somehow makes it worse. You put it on the kitchen bench, and you leave it there for 4 days. When you finally open it, there is a number, and it is $1.4 million. And then, further down, there is a second number, and nobody has ever mentioned that one to you. Here is what almost nobody in this country understands about superannuation. It is not part of your estate, it does not pass under the will, it sits outside all of that, in its own separate system, with its own definitions of who counts as family and its own price attached to the answer. Your mother could have written the clearest will in Australia and it would not have changed a single line of that letter. And the same $1.4 million produces 4 completely different outcomes depending on one thing. Not how much your mother saved, not what the will said, not what she told you she wanted, who you are to the tax office, and which door the money walks through on its way to you. That is it. Those 2 things decide everything, and neither of them is about you as a person. So we are going to open that envelope 4 times. Same balance, same fund, same letter. 4 different second numbers. And by the 4th one, you will understand why the last section of this video is the only part that can still change anything for anybody watching. Open it the first time. You are her husband of 31 years. You open the envelope at the same kitchen bench, in the same house you shared. $1.4 million. And the second number is 0. Nothing. Not reduced, not deferred. 0. Because for tax purposes, you are a dependent, and a lump sum death benefit paid to a tax dependent is entirely free of tax. Both components, taxed and untaxed, the whole balance, straight through. The system has decided that a spouse is not really inheriting money so much as continuing to hold it. A spouse counts. A child under 18 counts. Somebody who was financially dependent on her counts. And so does an interdependency relationship. If you are on that list, the second number is always 0, and honestly, the rest of this video does not apply to you. What follows is for everybody who is not. Now, open it the second time. You are her son. You are 44, you have your own mortgage and your own kids, and you have not been financially dependent on her since you were 19 years old. Same envelope, same fund, same $1.4 million, printed on the first line. And this is where you learn something about superannuation that your mother almost certainly did not know either. That balance was never one thing. It was 2 entirely different things, wearing the same number on the same statement for 40 years. There is a tax-free component, which is money that went in after tax. Personal contributions your mother made from money she had already paid tax on. That part comes to you completely untouched, always, no matter who you are or which door it walks through. Nobody can take a cent of it. And there is a taxable component, employer contributions, salary sacrifice, and every dollar the fund earned over 40 years. For the overwhelming majority of Australians, this is almost the entire balance, because most people never had spare money lying around to make large after-tax contributions on top of what their employer was already putting in. Say your mother's split was typical. 1.19 million taxable, 210,000 tax-free. The fund withholds 15% on the taxed element of the taxable component, plus the 2% Medicare levy, 17%, on $1.19 million. That is $202,300. $202,000 removed before the money reaches you because you grew up and stopped being financially dependent on your mother. That is the entire qualifying event. There is no threshold, no tax-free amount, no exemption, and no concession for the fact that the family home was already sold to fund the care she needed at the end. $202,000 for the crime of having grown up. Now open it a third time. Same son, same 44 years old, same $1.4 million. But this time, your mother's nomination pointed at her estate rather than directly at you. The fund pays the money to the legal personal representative instead. It goes into the estate, the executor handles it, and it reaches you through the will rather than landing in your account directly from the fund. Slower, more paperwork, one extra set of hands. The same 15% applies, but the 2% Medicare levy does not, because a deceased estate does not pay the Medicare levy. That is the entire difference. 2 percentage points for taking a longer road. 15% of 1.19 million is 178,500. You have just saved $23,800. $23,800 for a difference you cannot see and did not choose. Your mother filled in a form at some point, possibly a decade ago, possibly at a kitchen table with a form she did not fully understand and no reason to think it mattered. That single tick box was worth $23,800, and nobody in the room when she signed it knew that. Now open it a fourth time. Same everything, except part of what arrived was not her savings at all. It was a life insurance payout, held inside the super fund, triggered by her death. Millions of Australians have exactly this arrangement, and most of them were signed up to it by default when they started their first job. That portion is what the system calls an untaxed element, and it is taxed at 30% plus the Medicare levy, 32% when it is paid directly to you, not 17, 32, nearly double on the portion that was specifically bought to protect you. The insurance she paid premiums on for 25 years, specifically so that you would be looked after, is the part of the balance that gets taxed at nearly double the rate. Same envelope, same kitchen bench, same $1.4 million printed on the first line of the same letter, and a second number that swung by hundreds of thousands of dollars based on decisions nobody explained to anybody. 4 second numbers, 0, 202,000, 178,000, and on the insurance portion, nearly a third of it gone. And here's the part that matters more than all 4 of those numbers put together, because it is the only part of this entire video where anything can still be changed by anybody. None of this is fixed. The taxable component is not a permanent property of the money. It is a category the money sits in, and while your mother is alive, she can move money out of that category and into the other one. It is called a withdrawal and recontribution strategy. After 60, and once a condition of release is met, she withdraws an amount from super and puts it straight back in as a non-concessional contribution. The money that leaves the fund is taxable component. The money that walks back in the door a week later is tax-free component. Same dollars, different category, permanently. Nothing about her balance changes. The same dollars go out and come back in the same week. But their category changes permanently, and every dollar shifted across is a dollar that will never be taxed at 17 or 32% when it reaches you. Done patiently over several years, within the non-concessional contribution caps and using the bring forward rule where it applies, it can move a very large portion of an entire balance from one side to the other. It is legal, it is well established, and financial advisors do it routinely for clients who ask. Which means the $200,000 in this video was never inevitable. It was the cost of nobody knowing this while there was still time to act on it. The strategy only works while she is alive and while she still meets the age and balance conditions. Once the letter is printed, the components are locked, and nothing anybody does afterwards moves a dollar between them. It is the single most valuable conversation almost no Australian family ever has, and it has to happen years before anyone wants to think about it. So somewhere right now, an envelope is sitting on a kitchen bench in a house in Australia. It has a super fund printed in the corner and a name spelled correctly. Inside it, there is a number that somebody worked 40 years to build, and underneath it, there is a second number that nobody in that family has ever heard of, and it is already too late to change it. Tell me in the comments whether anyone in your family has ever talked about which component their super sits in.